Welcome to the All Financial Hour podcast with Steve All.
Steve, welcome to the show. How you doing?
I'm doing great. I had a great week. Last weekend was fantastic, something I had never done before. We took a group of clients for one of our client appreciation events and actually did the tour of Busch Stadium.
Oh, very cool.
So we got to go down in there. We got to go down in the dugout. They won't let you on the grass, but that grass looks like a putting green.
Yeah, it's pretty important.
It was unbelievable. So we went down in the dugout, and they said we weren't allowed to use the phone to call the instant replay.
They're taking all the fun.
We couldn't call the bullpen, so we couldn't play on the phone. So we did a good job, and we're compliant, and went from there. Got to go up into the KMOX booth, which that's always fun. It's a lot more fun when you're up there with those guys when they're actually doing the game, which working with KMOX, they have allowed me to come up there a couple times, not to talk or anything like that, but to watch these guys do what they do. So we went around the Champions Club. It's got all the trophies that they've presented for the World Series. It was a great event for things that you don't normally see. And probably the biggest surprise for me is I had been over to Ballpark Village before, and I saw the layout of home plate, the pitcher's mound, first base, second base, and third base in AstroTurf. That was actually where home plate, first base, second base, third base, and the pitcher's mound were in the old Busch Stadium before they tore it down.
Oh, very cool.
And it's like right across the street. It's not like a whole lot of area away from it. It's right across the street. And when they tore down the old Busch Stadium, they had like 120 some days to put the new one back together because that was opening day. And they got it done. So that was probably the biggest surprise for me when I went there, but it was a lot of fun to actually see some of the behind the scenes. It was a great event. I'm going to tell you, if you've never done the tour of Busch Stadium, take a little time on a Saturday morning, go down and do it. It was a blast. I got more compliments and things from the clients that thank you very much. This is not something that I would have done, but I was very glad that we did it. And then we spent a little bit of time. It was a non-guided tour of the museum, the Hall of Fame Museum for the Cardinals. It was great. I absolutely loved it. So again, if you have the time, do that Busch Stadium tour. It was a very, 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 very great event for myself and our clients.
Yeah, super cool. And, for, the baseball lovers out there, I mean, what a bucket list item to say, hey, man, I was down on the field. I got to go in the dugout, the grass, that's kind of sacred. And they wouldn't let us play on the phone. But bottom line, you got closer than than a lot of other people. I mean, what a cool experience. That's awesome.
It was great. And like I said, all the clients, this is fantastic. It's not something I've done. We've been to the Fox Theater. We've done stuff like that. But this was the one. And the greatest thing of it was most of the clients had their Cardinal jersey on, the old jerseys from the players that came in. So it was a great day. Great day. Awesome. Had a lot of fun.
Well, I love that. I love you did a great client event. And, for those listening that are thinking, oh, my God, that sounds amazing. Well, listen, when you join the All Financial family, these are cool events that, Steve and his team, they like to do and celebrate his clients and say, look, we've all worked hard. We play hard. Let's celebrate. Let's go out and have fun together. And every single year you do, as you mentioned here, different events. So, again, just another perk of being a part of the All Financial family. Again, that phone number 636-230-8820. Now get this, there's a new study that says that 61% of retirees would rather preserve their money than grow it. The study also found that 65% wanted guaranteed income for life, makes sense, and 69% reported discussing loss prevention with their advisor. So does the fear of losing money work against some people to the point to where they just can't even grow their money enough to fund a long retirement, Steve?
Yeah. I've seen it in a few occasions where people will go broke safely. Their money's basically in cash equivalents. It's a little bit easier today. People feel better because money markets are paying a little bit more and CDs are paying a little bit more. Now, they hardly ever will keep up with inflation, but they're higher than they were then. So we have to look at it, and you start to look at those things. 65% wanted guaranteed income. Well, that's that pension-style income. And that's one of the ways that we could look if you had a need and how you could do a personally funded pension. where you would actually set your money aside, and we'd look and find out what's a guaranteed income that's going to be guaranteed for you and your wife, if that's the person or spouse, as it goes from there, that gives you the amount of money for that. Now, that's guaranteed by the insurance company. So that's the idea of the guaranteed income for life. How could I get that if I didn't have a pension?
Sure.
And then loss prevention. A lot of people out there that if they look at their lifestyle, that making a lot of money is not necessary for them to stay retired. Avoiding major losses is. So we do get a lot that protected growth is very, very, very important. Now, I'll state it. We're a full-service firm. I do investments, and I can be as conservative as you want or as aggressive as you want. I do life insurance for people that need it for enhancing a benefit to their heirs, and I also do annuities if they need that personally funded pension or they're looking for that protected growth. So I look at the idea around it in my firm. Let's put that comprehensive retirement plan together, and then let's find the product that will help fit. So if you're looking for something that's more than just investment advice, you'd like to find out how are you going to get that income you need for retirement, how you could protect your assets from negative markets but still grow it and participate in the market when it does go up. So if you're looking for any of those things, ask about the comprehensive retirement plan, because it will include an income plan, a tax plan. We're going to look at your legacy, and we're going to look at your risk reward and how much risk you are taking for the reward that you're getting. Give us a call now. Ask for the comprehensive retirement plan.
You know, one of the issues in this election year is the future of Social Security. And if Congress does nothing, we could possibly see a 25% cut in benefits within the next 10 years. And then, of course, you guessed it, neither side appears to have a plan. They just kind of want to blame the other one. Well, David Dooley, co-founder of the Social Security Risk Score, says that's not doing the rest of us any good.
They don't want their retirement income plan subject to political football. And so if we can see the train coming down the track right now, and we hear the whistle because the train's around the bend, we don't quite see it, we hear it, but we know it's coming. We know something with Social Security is going to have to change. How do we make decisions today to put our retirement income plan in a place that no matter what happens in D.C., no matter who's there, that we have the peace of mind that we made decisions today to insulate ourselves so we're not worried about someone who's saying, vote for me because I won't take your benefit, or that person's going to take their benefits.
Well, I mean, exactly. I mean, what do you do? So, Steve, what would you recommend now to hedge against a possible cut in Social Security down the line?
Well, if you got questions around that, hit the website. It's got a report that says, are you subject to a cut in Social Security benefits? How would that affect you? You can get your Social Security risk score directly off of our website. But I think when you start to look at it, when you're doing Social Security, I think the main thing about Social Security is to optimize it. I want the best amount that I can get. And if I'm married, it's for the two of you all. Because a lot of people forget that the survivor's benefit is the larger benefit of the two, the amount of the larger benefit. So if you're looking at that and how do I optimize my Social Security, that's the best report that we can look at for you. And there are insurance products that assist you if they make the decision to change that. So Social Security optimization, can't do it in a vacuum. You have to come in. I have to do a full analysis. And we can also look at your Social Security risk score to find out if they cut that, how that would affect you. Give us a call now and ask for the Social Security optimization.
You know, we've heard a lot of so-called experts out there say that the stock market is going to do a little pullback before Election Day. The predictions are anywhere from 10% to 30%. So here's Morgan Stanley's Mike Wilson on Bloomberg.
What worries me is that people have a lot more exposure to high multiple stocks than they think they do. And if you have an event that's unpredictable, then you could have a real reset on valuation of 10, 15%. Like, I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons. Earnings reasons, election outcome reasons, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period, and it's going to be choppy.
I mean, I think he's kind of on to something there. And then you got another commentator that says, he cautions by saying it's better to miss that last 5% of the rally than catch 100% of the inevitable downside. Steve, what are your thoughts on this?
Well, that's what I start to look at. We're talking market timing. People don't realize that corrections, 10% movements, are part of a market cycle. That happens almost every year that you have that kind of a downturn. But we had about a 9 to 10 year run where it didn't happen but like 3 to 4 different times. But it still happens. So those downturns are there. I do believe that we're going to have some more volatility, and that was basically by the fact that prior to a couple weeks ago, we had Joe Biden and we had Donald Trump.
That's right.
We had a current president that we know what he would do if he was reelected, and we had an ex-president that we know what he would do. So a lot of the uncertainty was gone. Now that Kamala Harris is into the picture, there's a little bit more uncertainty. So I do agree with what he said, that uncertainty does bring questions to market. It brings volatility to market. And that's why we look at Market Guard. I have the availability with Market Guard to be as aggressive as you want to be. I can also go back to tactical management and be as conservative as you want to be. So my idea of it is I want the best return I can get with the least amount of risk possible. And I want it done methodically, mathematical, non-emotions. Those are the important things when we start doing this, because of the fact that we do have headwinds out there right now. What did he mention were some of those headwinds? He mentioned the fact we got a presidential election coming up. What about what's going on in Israel? What about the Federal Reserve? Are they going to lower rates? If they do, how many times they're going to do it? How's inflation going to look at it? So my question of it is when we look at the questions of the market, most of the ones that come to me are, Steve, is it time to hold? Is it time to sell? And when I make the decision to sell, is it time to buy and get back into the market? I would rather allow Market Guard to assist us with making those decisions. Our target models are not fully invested right now. Why? Because of those headwinds. I'm going to allow them, again, mathematical, methodical, non-emotional decisions to make those changes for us versus what happened today in the market. So I'm going to say, if you've got questions around when to buy, sell, hold, what should I do right now, give us a call. Ask about Market Guard.
And again, Market Guard is really a tool and a strategy used to help you along these bumpy rides of the market, right?
Yes. All it is, I can be as aggressive as I want. I can do stock portfolios. I can be as conservative as I want.
Gotcha.
And when those things change, allow the methodical models to change it versus I feel this or its emotions are the ones that change it. Because my experience says that emotions cause more problems in the markets and affect returns very highly when we make emotional decisions versus methodical or mathematical decisions.
A 73-year-old wrote to an advice column explaining that they have a pre-tax IRA of nearly $1 million. They are looking to do a Roth conversion on their IRA over several years. They heard it's better to do it during a downturn of the market, not just during an uptick. What would you tell them there? Is that sound advice?
Well, the idea around it of it is, yes, it's always better if you're going to do Roth conversions to do them when the market's down. But now you're talking about market timing. So the idea around it of it, 73, you look at it on how you're paying taxes. The benefit is mainly for the heirs of the person, because it's obviously they are not going to have to spend it down to stay retired. So that's when I look at it, is who's really going to benefit. That's the kids. Some people say always do it at the beginning of the year. Some people say always wait to do it at the end of the year, because then the tax bill that you owe on that, because you're supposed to pay the taxes during the quarter that you do the conversion, then your tax bill's a lot less or further away. So your money's in the account. A lot of times we'll use the barbell approach. If 100,000 or 150,000 is the number that we've looked at, that would be a good amount of conversion for you, we might do half of it at the beginning of the year, half of it at the end of the year. Because the only promise I'll make you is I don't know what the market's going to do. And if I make it at the beginning of the year and the market falls, you're going to wish you did it at the end of the year. If I did it at the beginning of the year and the market goes up, you're going to love me. I can't predict that. And I think that's what we need to stay away from. The big thing of it is why are we doing the conversions? Once we get that part taken care of, that's the important thing. And I believe that doing Roth conversions, if you've got too much money in your IRAs and 401ks, could be the most successful thing you can do to enhance the benefit to your, quote, heirs and a successful retirement. You know, because I believe having too much money in your accounts subjects you to tax rate risk. You know, and people will always ask, Steve, what do you mean when you say too much money in your IRAs and your 401ks? Mm-hmm. The average amount in that is around $150,000 to $175,000. That's average. So if you've got an extra large between $250,000 and $750,000 in your IRAs or 401ks, you might spend that down during your lifetime. You know, depending upon incomes, lifestyle, you might spend that down. If you've got a double X between $750,000 to $1.5 million, chances are you won't spend that all down. If you've got a triple X, 1.75 and above, chances are you could pass a tax time bomb onto your kids. So the idea around it is, would you rather give the assets to your children as tax efficient as possible, or just hand the money to the IRS once you're no longer here? So that's when we start to look at it. Thank God I've never had anybody say they'd rather leave their money to the IRS than they would their own family. Having too much money in your IRAs and 401ks, again, could subject you to tax rate risk. And if you have $500,000 or more in IRA or 401k assets, give us a call. Ask about the tax planning. The $500,000 is there because the numbers work better if you've got more than that, and if there's a lot more advantage of Roth conversions if you're in that category.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.